Today's video is an absolute game changer, and if you're someone who's ever had a few doubts about the power of cash savings, well, I've got some mind-blowing information that's about to shatter your financial world. You see, when it comes to building true wealth, the banks are keeping a secret from you, and Robert Kiyosaki himself knows it all too well. In this episode, we're going to reveal the secrets that the big banks hope you never discover. We'll uncover the 5 assets that don't just beat cash savings, they absolutely crush them. By the end of this video, you'll have a whole new perspective on your money and what it can do for you. So do me a favor, give this video a thumbs up right now and share it with your friends, family, and anyone who needs to break free from the shackles of traditional banking. And speaking of financial freedom, let's dive right in and expose the secrets that banks hate and Robert Kiyosaki absolutely swears by. You ready? Let's roll! The problem with cash savings. The first thing we need to address is why cash savings might not be the best way to grow your wealth. Cash savings are what I call lazy money. While it's safe in the bank, it's not growing. In fact, it's losing value due to inflation. Banks love it because they can lend your money out and make a profit, while you earn next to nothing in interest. Cash was once king, but it's now losing its purchasing power over time. Inflation erodes the real value of your money, and when your savings account interest is lower than the inflation rate, you're essentially losing money by keeping it in the bank. This is why it's crucial to explore alternative avenues to make your money work for you. By investing in assets that have the potential to appreciate or generate income, you can combat the erosion of your wealth caused by inflation. Now we'll dive into 5 assets that can provide a better return on your investment than traditional cash savings. Asset 1: real estate. Investing in real estate properties can provide a steady income stream and potential for appreciation. Real estate is a tangible asset, which makes it a favorite among investors. You can earn rental income from properties, and over time, their value often increases, allowing you to build wealth through both cash flow and capital appreciation. While it requires careful management and investment, real estate offers various options, including residential, commercial, or even real estate investment trusts, REITs. Diversifying within the real estate market can further enhance your investment strategy. Just remember, successful real estate investing often involves understanding the local market, conducting thorough due diligence, and having a clear financial plan. But the potential for long-term financial growth and stability is one of the key reasons why real estate is a favored choice among seasoned investors. Asset 2: cryptocurrencies. Digital assets like Bitcoin have gained immense popularity for their potential to grow significantly in value. Cryptocurrencies represent a revolutionary shift in the world of finance. Unlike traditional currencies, they are decentralized, secure, and built on blockchain technology. Here's why they are considered a compelling asset class. Cryptocurrencies have experienced exponential growth, with Bitcoin being the poster child for this phenomenon. Bitcoin, created by the pseudonymous Satoshi Nakamoto, emerged in 2009 and has since grown from being virtually worthless to having a market capitalization in the trillions of dollars. This remarkable appreciation has drawn the attention of investors worldwide. One of the key advantages of cryptocurrencies is their scarcity. Bitcoin, for instance, has a fixed supply of 21 million coins. This limited supply, combined with increasing demand, can drive up the value of Bitcoin over time. Cryptocurrencies also offer benefits such as borderless transactions, reduced transaction fees, and the potential for financial inclusion in regions with limited access to traditional banking. These qualities make them a promising asset class for the future of finance. However, it's important to note that the cryptocurrency market is highly volatile. Prices can experience rapid fluctuations, which can lead to substantial gains or losses. Therefore, it's crucial for investors to approach cryptocurrency investment with caution, conduct thorough research, and consider their risk tolerance. Many investors allocate a small portion of their portfolio to cryptocurrencies, viewing them as a speculative asset with significant growth potential. As with any investment, diversification and a long-term perspective are key to managing risk and maximizing potential returns. Asset 3: small businesses. Owning or investing in small businesses can generate substantial income and equity. Small businesses are the backbone of many economies, and they offer unique opportunities for individuals looking to build wealth through entrepreneurship or strategic investments. Here's why small businesses can be a valuable asset class. 1. Potential for hands-on involvement. Owning a small business allows you to have a hands-on role in its operations. This level of control can be empowering, as it enables you to make strategic decisions that directly impact the success of your venture. It also offers a chance to follow your passion and create a business that aligns with your interests and expertise. 2. Diverse investment options. If you prefer not to start a business from scratch, there are various ways to invest in small businesses. You can purchase an existing business, participate in a franchise, or become an angel investor or venture capitalist, providing capital to promising startups. 3. Income generation. Small businesses can be a source of consistent income. Successful businesses generate profits, which can provide you with a steady stream of revenue. Depending on your business model, this can take the form of a salary or regular dividends. 4. Equity building. As a small business owner, you can build equity in your company over time. This equity represents the ownership stake you hold in the business. 1. As the business grows and becomes more profitable, your equity's value increases, potentially leading to significant wealth. 5. Local and global impact. Small businesses often have a substantial impact on their communities. By creating jobs and contributing to the local economy, they can serve as engines for growth. They also have the potential to expand their reach and make a global impact with innovative products or services. It's important to acknowledge that owning or investing in a small business comes with its share of challenges and risks. Entrepreneurship demands dedication, hard work, and a willingness to learn from both successes and failures. Additionally, small businesses can be vulnerable to market fluctuations and competition, making careful planning and adaptability essential. For investors, conducting thorough due diligence before investing in a small business is crucial. Understanding the business model, market dynamics, and financial health of the company is key to making informed investment decisions. Furthermore, diversifying your small business investments can help spread risk and increase your chances of success. Asset 4. Collectibles. Rare collectibles, such as art or vintage cars, can appreciate in value over time. Collectibles are a unique asset class that combines passion with potential profits. Owning rare and valuable collectibles can be both enjoyable and financially rewarding. Collectibles are a fascinating avenue for investment, often driven by the passion and enthusiasm of collectors. Here's why they are an intriguing asset class. 1. Historical and emotional value. Many collectibles, such as vintage cars, rare coins, or antique artwork, have historical significance and evoke strong emotions. Owning a piece of history or a cherished work of art can be deeply satisfying and emotionally fulfilling. 2. Diverse range of options. The world of collectibles is vast and diverse. It includes not only traditional items like stamps, rare books, and classic paintings, but also more contemporary collectibles like action figures, memorabilia, and even digital assets like NFTs, non-fungible tokens. This diversity allows collectors to pursue their personal interests and areas of expertise. 3. Potential for appreciation. While the primary motivation for collecting is often personal enjoyment, many collectibles have appreciated in value over time. Rarity, demand, and the passage of time can significantly increase the worth of these items. As a result, they can serve as investments that provide both enjoyment and potential financial gains. 4. Tangible assets. Unlike stocks or bonds, collectibles are tangible assets you can physically possess and display. This adds a tangible and aesthetic dimension to your investment portfolio, enhancing the overall experience of collecting. 5. Long-term investment. Collectibles are typically considered long-term investments. Their value often appreciates slowly over time, making them suitable for individuals with a patient approach to wealth building. However, it's essential to approach collectible investments with a discerning eye and proper research. While some collectibles can appreciate significantly, others may not, and their market can be subject to fluctuations. Due diligence, knowledge of the specific collectible category, and understanding market trends are crucial for success. Asset 5. Intellectual property. Creating and selling intellectual property, such as books or online courses, can be a source of passive income. Intellectual property is a unique asset class that leverages your creativity and expertise. When you create valuable content, it can continue to generate income for years to come. Intellectual property, often abbreviated as IP, encompasses a wide range of creative works, including books, music, films, patents, trademarks, and online courses. Here's why intellectual property is an intriguing asset class. 1. Creativity and expertise. Intellectual property allows creators to share their knowledge, skills, and creativity with a broad audience. This can include writing a book, composing music, developing software, or teaching through online courses. It's a way to leverage your expertise and passion for a specific field. 2. Passive income. Once created, intellectual property can generate passive income over time. Books continue to sell, music can be streamed, software can be licensed, and online courses can attract paying students long after the initial effort is invested. This passive income can provide financial stability and opportunities for additional creative pursuits. 3. Scalability. Intellectual property can be scaled to reach a global audience. With digital platforms and online distribution, your intellectual property can be accessible to people worldwide, allowing you to tap into a vast market. 4. Diverse forms. Intellectual property comes in diverse forms. For example, you can write novels, compose music, develop software, create art, or teach online. This diversity means you can find a medium that aligns with your interests and expertise. 5. Longevity. Well-crafted intellectual property can have a long shelf life. Books written decades ago, classic songs, and valuable patents continue to generate revenue for their creators and their heirs. This longevity makes intellectual property a legacy asset that can benefit future generations. Creating intellectual property, however, requires dedication, skill, and a clear understanding of your target audience. Promotion and marketing are also vital to reach a wider audience. Protecting your intellectual property through copyright, patents, or trademarks is crucial to secure your rights and potential revenue.